So today we witnessed a tremendously green trading session for Tesla stock today, and in this video I want to go ahead and cover the underlying reason why we saw such a big move, but also cover some topics that we absolutely want to pay attention to going forward. Now in yesterday's video I mentioned how at 10 a.m. today we were getting the job opening numbers, and I said that anything below the expectation of 9.5 million, I said anything that was 9 million and below was going to be seen as very optimistic. But what we ended up getting today was beyond optimistic, as we got the total job openings coming in at 8.8 million. Now this shows that there is some sort of cooling off taking place in the labor market, which is exactly what the Federal Reserve wants to see. In fact, if we take a look at Tesla stock at exactly 10 a.m., we see the largest green candle for today took place after that report came out, which just goes to show you that oftentimes, as I say on the channel, you have to stay data dependent. You can't just look at the charts for Tesla or just look at one data point, and you have to have a holistic approach and look at what's going on in the overall economy. I know oftentimes when I talk about these economic reports, individuals kind of say, oh, well, this guy's just saying a bunch of stuff, but as you can clearly see by this chart, the job numbers had a huge influence on the overall market, including Tesla. In fact, after these job numbers came out, we saw that the target rate possibilities for the 20th of September Fed meeting actually dropped from 52% all the way down to 13.5%, which pretty much shows that the market is starting to get very optimistic that the Fed is most likely not going to hike in their next meeting. Why? Well, because in Jerome Powell's speech on the Jackson Hole Symposium, he basically mentioned that one of the things they're seeing is, yes, inflation is cooling off, and that's great news, but we want to see job openings contract. And so this report showing that things are going in the way or in the direction that the Fed wants is extremely bullish. But on top of that, we saw the US 10-year Treasury note decline, which is absolutely another reason why the market pretty much rallied today. As I often say publicly on this YouTube channel and also privately to the Push and Profit private group, I say that you want to take an eye and pretty much pay attention to what's going on with the 10-year Treasury note, because of course there's this inverse relation where if the US Treasury or 10-year Treasury note is going upwards, well, that puts a sort of liquidity drain on the markets, as investors are a little skeptical to go ahead and put capital into equities when you get this guaranteed return from investing in treasuries. And so inversely, when treasuries start coming downwards, well, now it makes more sense to deploy capital into the markets. And so this is what we overall pretty much saw for today's trading session, which is why in the Push and Profit private group this morning, I said a bullish day like this would call for TQQQ, which if you guys don't know, by the way, TQQQ is a triple leverage ETF for the NASDAQ index ETF QQQ. And so with a bullish day like today, it only made sense to see QQQQ rally upwards. Now, if you guys want to get access to my daily briefings where every single day I talk about what's going on with the overall markets as well as provide some general trade ideas, make sure to check out the first link in the description below, but also keep an eye out for the other links in the description below, as well as one of the links is going to be a link for my free weekly newsletter, where basically every Sunday I send out a weekly newsletter talking about what are some things that we should pay attention to going forward into the markets. But with that said, I want to go ahead and just talk a little bit more about these job numbers that we saw today, and then I want to go ahead and hop into my laptop and talk about some additional things that we absolutely want to look at when it comes to Tesla stock. So along with job openings declining, we also saw job quits declining, right? So this number of workers quitting their jobs declining by 250K is a sign that workers are feeling somewhat less confident about switching to more lucrative employment opportunities elsewhere. And so this means that, hey, people are not quitting their job because there's fear that they may not be able to get another job. Now, again, typically this is not what you want in an economy. You want a very robust job market. The problem is the job market apparently is too robust for the Federal Reserve in their fight against inflation. And so what they want to see is things cooling off more. But along with that, general hiring rates have also declined as well. And so overall, we're seeing favorable conditions for the Federal Reserve, meaning that it's more likely that they won't hike in September, which of course the market is being very optimistic about this outlook. But I want to go ahead and talk about some things that we want to pay attention to going forward into this week, and also just hop into my laptop, as I said earlier, to talk about Tesla stock. So we are in the juicy part of the video, or at least that's what YouTube's analytics tell me, where oftentimes a lot of people really enjoy this section of this video where I go ahead and dissect some of the things that we want to pay attention to, right? So what have we been seeing? Well, obviously, as I mentioned earlier in the beginning of this video, we saw a tremendous move up, not only for Tesla, but if you look at just the overall S&P 500 index ETF, we see this move up. It wasn't just native to Tesla, it was the overall markets reacting to good data, right? It was a huge move up. And I want to recap some of the things I've said in previous videos of some levels, and then talk about the next level that we want to pretty much pay attention to, right? So let's go ahead and talk about it. So before a couple, honestly, I lose track of how many videos, but let's say a week ago, I said that around this 240 area, something that we wanted to pay attention to, as that was an area where it was an area of support and it could be an area of resistance. And so what ended up happening? We saw Tesla pretty much touch that area and get rejected. Okay, well, it tested the 240, got rejected. I said, that's still an area we want to watch out for. I'm not sure if we're going to break above it. We consolidated for a bit. We kind of tested it again yesterday and then immediately rejected. And then I said in yesterday's video, although I don't have a crystal ball, I don't know if things are going to shoot up and shoot downwards, the thing that we want to pay attention to is obviously going to be the job data, right? And what did we get? We got good job data, and we saw Tesla move upwards along with the overall market, as I stated, going forward. So what is something we want to see going, to the next day, right? Because again, I don't have a crystal ball, right? I do invest in Tesla in a long term, and I also have a short-term trading account. And although I've been right on Tesla, dead on for a while now on this channel, I have to stress that I don't have the crystal ball, right? I just look at different data points, and we go ahead and we follow the data. And so what is the data that we're absolutely going to want to pay attention to? Well, tomorrow we're going to have the ADP employment numbers, right? Now, this is just as big as the government numbers that come out on Friday, right? The U.S. non-farm payrolls and U.S. unemployment rate, U.S. hourly wages. That's always good. We always know that the ADP report pretty much comes out before, and it's a little bit of an indicator of what the government numbers are. Now, for a while now, there's been a lot of revisions with the government numbers that have came out that a lot of individuals are kind of not trusting these numbers as much. For me personally, I just take it for what it is. It's difficult, and I understand that revisions have to be made, but some individuals get skeptical when there's a lot of revisions being done over and over again. And so that puts us in a section or an area where the ADP employment numbers tend to have a little bit more weight, as we generally see them as a little bit more honest. Not saying that the government lies to us. I mean, I don't want to I don't want to go to a rabbit hole there, right? That's something else, right? And so what I'm saying is that tomorrow's numbers that come out at 8:15 could be another area that could severely shape the markets. And just like we saw, let's go ahead and highlight this. As I pointed out in today's video, at 10 a.m. exactly, right? We see this huge move upwards with Tesla. Let's look at SPY. Same thing. Once these numbers come out, let's look into the 1 minute, because the 5 minute you can't really see it that well. Let's go to the 1 minute, right over here. So 10:01 it came out. We see the move up on the SPY. Tesla, let's go ahead and zoom in, and at 10:01 we see this move up, and then we continuously see this move up. And so this job data that came out today was a huge influence, and just like that, the ADP numbers tomorrow are going to be a huge influence, as it's the numbers that are getting much more trust these days in regards to job data, right? Now, of course, unemployment is still something that we want to watch out for. Just because there's been revisions doesn't mean that we just disregard that data. Absolutely not. We want to still look at that, right? Of course, after tomorrow, we have the PCE report, which is another big report that's coming out. So definitely we're going to want to keep our eyes on that. And again, we're going to want to keep the U.S. 10-year Treasury open, especially if you're scalping. If you're trading in the short term, you want to pay attention to that, as it does have an impact on the markets. And so let's go ahead and look into a daily time frame. So one of the things I'm looking at is that when we're looking at the volume profile right over here for Tesla, we see that there's a lot of volume relative to price. Now, I talk about this often on the channel, but I often have to say it again because YouTube tells me about 90% of people that watch my channel or my videos haven't ever seen my channel before. I know it's insane, right? And if you're new, consider subscribing, right? So volume relative to price is different from your traditional volume relative to time, in the sense that it's just showing how much volume at a certain price level, right? How much of exchange is taking place between buying and selling. And so when there's a lot of volume relative to price, well, that shows us that it could be an area where we start to see a consolidation or a resistance or a support if it was down below. In this case, it's looking like it's going to be an area of resistance. So this could be a little bit challenging for Tesla. And if we don't have good ADP numbers showing that, and again, I know good is kind of weird to say, where we're saying we want to see unemployment or less jobs out there, right? And honestly, that's not good, but for this specific scenario, that's what we want to see. The markets want to see, we want to give the Fed what they want in order to really please them and make sure, okay, inflation is coming down, job data is coming to what they expect, so they don't hold out for longer. Because it's not only just about the Fed's hiking additionally. The main concern is how long are they going to keep rates higher, right? Now, the estimate from a lot of these big banks like Wells Fargo, J.P. Morgan, Goldman Sachs, etc., is that, in the spring of 2024, that's when we're going to see job cuts. And there's a lot of division on whether or not that's good or not. There's some sentiment saying, well, that's too long and the Feds are going to hike or keep rates too high where it's going to break something. And that's something that we're seeing. We're seeing a lot of stress on consumer pockets. One of the questions I got today in the Push and Profit private group was asking me, do I think we're in a bull market? And, what I responded is that I think we're in a bull cycle, but we're still in a secular bear market, right? And I know that may be off, but let's go ahead and break this down. In a bull market, we don't see, credit card debt exceeding these high levels. We don't see auto loan debt or auto loan defaults at these levels, right? In the bull market, that's not something you see. And so we're seeing on an economic level a lot of bad news coming out and people pretty much living on credit. I mean, it's ridiculous the amount of people that have just $10,000 in credit card debt, and it could be for simple things. It's not only just necessities. I mean, I think some individuals are still living like how things were in 2020, where they're racking up credit card debt just to go to Popeyes or something, right? That's a joke from Orlando Minor if you guys watch his channel, but one of the things we're seeing is that there's still a lot of stress in consumer pockets, and that's not necessarily optimistic. And so I don't necessarily believe that we're going to break all-time highs. Of course, if there's data to support something else coming through that we may hit that, then I'll change my mind. But for now, I'm still sticking in what I've said, that, yeah, let's take advantage of these rallies. I'm not against taking advantage of these rallies. I mean, I said in 2023, in the beginning of the year, if you guys were watching this channel, that, hey, we're going to have a big shift where things are going to be very optimistic for the markets, as, I mean, things were just terribly bad in 2022. And so I don't expect things to continue capitulating. And that's what we got. We got this big bounce upwards. Then we talked about the earnings on the 19th for Tesla coming downwards. And now we're seeing this move up. I don't think this move is going to be a sustained move upwards. Of course, again, if we get the good ADP numbers showing, okay, jobs are coming down, we also get PCE showing us that inflation is also still coming down, well, that's going to be great. But the reality is, and this is just my thoughts, again, I don't have a crystal ball, but I don't think the PCE numbers are going to show inflation cooling off in the level that the Feds want. I believe the Feds are going to want to see it decrease a bit more, and we're probably going to see some flat numbers. But I'll let you guys know. I'll provide an update for those of you guys that are in the Push and Profit private group. The minute it comes out, I'll let you guys know. And I may upload a video that day, depending on how it is. Again, I am located in Florida, and we have a hurricane, if you guys don't know. So the idea is I may not even have power to go ahead and update you guys, to record these videos. Of course, still with my cell phone, I got my power banks, and so I could still communicate with the private group. But, I'll let you guys know. And so, we'll go ahead and watch for this area. And the idea is if we do reject, well, this could be an opportunity to start shorting in the short term and take advantage of that, right? And again, if we do continue falling downwards, well, as someone who's a long-term investor for Tesla, this is absolutely still great. I don't mind when Tesla falls down, because all I'm waiting is for Tesla to continue falling down, wait for that area of confirmation, and buy in. That's exactly what I did this day when I called it out weeks before, saying, hey, we're most likely going to bounce around this area. You guys could watch my previous videos where I talked about that, and that's where I added more into my long-term portfolio for Tesla. We started moving upwards. But again, if Tesla falls down, I don't mind, because I'm dollar cost averaging in Tesla. Now, you guys should always follow whatever your routine is when it comes to investing. You don't just buy or trade anything just because I said so. You want to have you want to see value in whatever you're trading and investing in, and do your own due diligence. But for me personally, for from a short-term perspective, this is the area we want to pay attention to. We want to see, do we break above it, or do we do we get rejected? My idea is we're most likely gonna get rejected, but if we do break above it, cool. We'll have some more opportunities, just like today when I called out looking at TQQQ. Which let's go ahead and map this out real quick, because I honestly I didn't obviously capture the whole move, but if we get from the open to the close, it was about a 7% day, and pretty much after here, this is where I caught it, all the way to the end, about 4%. Now Tesla, I believe, performed a little bit better than that, pretty close, I believe, actually, about 8% for today. So definitely, if we move up, well, great, because let's go ahead and look at the daily time frame. After we pass that area where there's a lot of volume relative to price, we again enter into low volume relative to price, and if there's buying pressure, well, that provides some more buying opportunities in the short term. Not that I'm going to want to buy in the long term. For me, if we continue moving up, for me adding into my long-term portfolio, I want to see Tesla break above this area of this descending trend line right over here, right? That's where I want to add in if we're moving upwards. If we're moving downwards, well, I want to see things fall down and then pretty much start bouncing upwards. Very simple. Dollar cost averaging is something that's out there. Many individuals know. It's proven. It's not, complicated math, and that's why it's much easier to be an investor. It's way harder to time the market. It's much easier to have time in the market, and Tesla has been one of my best positions. I've been very fortunate to have purchased Tesla. I believe it was in 2016 when I got my first shares of Tesla, and I just continued adding on. And the funny thing is, back then, I wasn't even paying attention to the fundamentals of Tesla. I'm going to be honest here. Back then, Tesla wasn't even profitable yet. I was just very bullish on the future of EVs. And sometimes some of the investments, there's a great book out there. I'm not going to, you guys could check out the links in the description below. I recommend several books, but there's a great book out there that just says that some investments aren't necessarily just based on the fundamentals, right? Because you could, let's say oil is doing very well. You could take advantage and buy oil or buy into commodities and take advantage of that. But some investments are just investments that you have a belief in for the better of humanity. And I just noticed that, hey, right now it's not happening. At that time in 2016, I said, but I definitely see EV cars being a trend. And since then, we've continuously seen EVs get bought more and more every year, to a point where now we're seeing a lot of these auto legacy companies like Ford, GM struggle. They're entering into the EV market, but they're very unprofitable. They don't have the infrastructure like Tesla at all, right? And what they're seeing is their cash cow with their internal combustion engines is holding them up. But we're still seeing this trend to EVs, and with government stimulation coming in, or kind of infrastructure encouraging EVs, well, that's why I'm still bullish on Tesla in the long term. So that's why, even when Tesla comes downwards, and I say I'm still bullish on Tesla in the long term, people may call me crazy, and that's fine, but I just see this trend and this belief that EV cars are going to be the future. I mean, if we go ahead and look at 2022, for Tesla, yeah, I was bearish on Tesla, trading it on the short term. I was selling calls, doing whatever to take advantage and hedge my long-term portfolio, but that didn't change my view on Tesla. I'm still bullish. If Tesla were to even go down even to $23, I don't think it's going to do that. But if it was, I would still be bullish on Tesla until I see something otherwise that would prove that EVs wouldn't be the future, right? And of course, we got other things in the pipeline for Tesla. We talk about fully self-driving and how that's going to be something that could possibly add into the bottom line for Tesla. We also talk about the Optimus, and I haven't spoken about it recently in these videos, but in the past, I've mentioned how, yeah, we can't put a valuation on these robots now. But after seeing that last live stream that Elon Musk did, where he shows how the cameras on the Tesla vehicles and the AI is helping it be able to navigate traffic, well, I think if we could get these Optimus robots and source out the parts to make them cheap, and also be able to have, say someone washing dishes and then learn how to do that, right, with AI, well, that's something that could be a huge benefit to the labor market in the future, right? We're seeing declining populations in wealthy countries like the USA, Canada, a lot of Western Europe, and so having these Tesla bots can be honestly something that can make Tesla one of the biggest companies market cap wise in the future, and that's why I'm still bullish on Tesla regardless on what happens. But to hedge my long-term portfolio, I often take advantage of these short-term trades, and so that's what I'm going to be watching out for. But with that said, I'm going to keep this video short, sweet, and concise, or at least leave it up to here, as I do got to go get some water for this hurricane. But hopefully you guys will see me on the next video coming out, and with that said, I'll see you guys on this video right over here. Take care, guys.